See what SpaceX has done. It just came out today. Started at, look at that, 151. Went up, got up. Let's see, how high did it go? Started at 150, got up as high as 176.52. That's the 52-week high for SpaceX here, guys. This is fun stuff. Very interesting. No data. I mean, we'll see what happens. I'm not getting involved in something like this right now. Check out the analyst rating. Here we go. Based on 2 analysts giving stock ratings for SpaceX in the past 3 months, we got one guy says buy, one guy says hold. What do you know? 12-month forecast, we've got the highest one is $190. That's an 18.05% increase from here. The average one is $152.50. That's negative 5.25%. And then we've got the lowest ones at $115, and that's a 28.55% decrease from here. There's only 2 analysts, so I don't know how that works. But whatever. Interesting. Let's read their stuff here. SpaceX surged following its record-breaking $75 billion initial public offering. Rapid Starlink subscriber growth and the X AI merger drive bullish sentiment, though analysts project volatility from high R&D burn and Starship regulatory hurdles. The current trajectory suggests continued market dominance through 2026 as the company scales global connectivity. The bullish view. Historic IPO and market valuation. SpaceX debuted as the largest IPO in history with shares opening at approximately $150, an 11% increase over the $135 offer price. The company's valuation quickly climbed toward $2 trillion, establishing it as the 6th most valuable U.S. listed entity and reflecting massive institutional and retail demand. Starlink subscription momentum. The Starlink segment has reached approximately 12 million active subscribers as of mid-2026, generating nearly $20 billion in projected annual revenue. This high-margin recurring revenue stream provides a stable financial foundation, with analysts targeting roughly 18 million users by year-end 2026. Strategic AI infrastructure integration. The February 2026 merger with xAI has positioned SpaceX as a major player in AI infrastructure by utilizing its satellite network for orbital data centers and securing major compute contracts like the $15 billion Anthropic deal. The company is diversifying beyond traditional aerospace revenue. Here goes the bearish view. High operating losses and R&D burn. Despite revenue growth, SpaceX reported a net loss of approximately $4.27 billion in Q1 2026. Substantial capex are driven by Starship development and the expansion of xAI's infrastructure, leading some analysts to warn about the potential for future shareholder dilution. Starship regulatory and technical risk. The FAA recently ordered an investigation into a May 2026 Starship mishap involving a Super Heavy booster crash. Such regulatory delays and technical anomalies pose risk for the timeline for the Artemis 3 moon mission and the deployment of next-generation Starlink V3 satellites. Declining average revenue per user. Starlink's average revenue per user, ARPU, has declined to approximately $81 as the company expands into price-sensitive international markets. Analysts caution that unless subscriber growth significantly outpaces these pricing pressures, the segment's long-term profitability margins could face compression. Yeah. We'll read its little stats here again just for fun. Opened at $150, got up to as high as $176.52. I guess it got as low as $149.34. I guess it went down a little bit, probably right at the very, very beginning. Market cap of $2.11 trillion. And that's 23,000 employees. All right, so we got a few headlines here. The closing bell. U.S. stocks rise after oil prices ease and SpaceX soars in its debut on Wall Street. Elon Musk becomes world's first trillionaire on SpaceX's first day of trading. SpaceX IPO closes up 19% and delivers the world's first trillionaire. SpaceX IPO includes a green shoe option. Here's what that means. What does that mean? Former SpaceX manager Derek Huerta reacts to historic IPO, discusses company's future. Let's do this one. Explainer. SpaceX's IPO includes a green shoe option. Here's what that means. Guys, it's 7:55 at night at June 12th, 2026. Time of recording this, reading this, whatever. Here we go to the article. New York, June 12th, Reuters. SpaceX raised a record $75 billion in its IPO on Friday after selling about 5% of its outstanding shares, but it could raise even more under a provision designed to keep trading smooth in the first few weeks after a company goes public. The company's initial public offering includes a so-called green shoe option, a standard feature of most large U.S. stock market listings that acts like a safety valve that keeps the stock price from going crazy one way or another in its first month of life. SpaceX gave Morgan Stanley, which is acting as the stabilization agent for the company, the option to purchase an additional 15% of its stock at the IPO price of $135 a share for up to 30 days, or about $83 million in additional shares on top of the 555.6 million SpaceX already sold. These additional shares, however, haven't been issued by the company yet, so the bank has to effectively sell them on the open market through a short position and buy them from the company later. The process begins before trading starts. Underwriters typically allocate and sell up to 15% more shares than are initially being offered. In SpaceX's case, that means investors could ultimately receive as many as 638.9 million shares if the option is exercised in full, and an additional $11.2 billion in capital for SpaceX. The mechanism serves two purposes. It gives underwriters a way to support orderly trading and provides issuers with the opportunity to raise up to 15% more capital if demand proves strong. The direction of the stock determines which path they take. How would the green shoe option work after the SpaceX IPO? Scenario. Stock trades above the $135 IPO price. What underwriters do? Exercise the green shoe option, where they get shares, buy up to 83.3 million in additional shares directly from SpaceX at the IPO price. Impact on SpaceX. SpaceX raises an additional capital, offering size increases. Stock trades below the $135 IPO price. They do not exercise the green shoe option. Buy shares in the open market at lower trading price to cover their short position. Underwriters' purchase can help support the share price during early trading. That makes sense. I mean, I don't know. It makes sense to me, I guess. Green shoe history. The green shoe option, formerly known as an over-allotment option, takes its name from Green Shoe Manufacturing, the first company to use the structure in its 1960 IPO. It remains the primary mechanism investment banks use to help manage volatility in newly listed stocks. In 2014, Alibaba fully exercised the green shoe option in its IPO to keep shares from skyrocketing. The Chinese e-commerce giant priced its shares at $68, but overwhelming demand pushed the stock to a 38% gain above the IPO price on their first day. As a result, underwriters exercised the full 15% green shoe option, purchasing an additional 48 million shares directly from Alibaba at $68 to cover their short. The move increased the total proceeds raised to about $25 billion, making it the largest IPO in history at that time. I remember that. I guess that's it. Alright. I guess that's it. So, let's read their profile here. Just see what they have on here. Space Exploration Technologies Corporation, doing business as SpaceX, is an American public space flight telecommunications and artificial intelligence company headquartered at the Starbase Development Site in Starbase, Texas. Since its founding in 2002, the company has made numerous advances in rocket propulsion, reusable launch vehicles, human spaceflight, and satellite constellation technology. As of 2026, SpaceX conducts more orbital launches annually than any other launch provider, including private competitors and national programs like the Chinese space program. SpaceX, NASA, and the United States Armed Forces work closely together on governmental contracts. The initial public offering of SpaceX in June 2026 was the largest in history, with a valuation at $1.77 trillion. SpaceX was founded by Elon Musk in 2002 with a vision of decreasing the cost of space launches, paving the way to a self-sustaining colony on Mars. In 2008, SpaceX successfully launched the Falcon 1 rocket into orbit after 3 failed attempts. Okay. We got Elon Musk. You know him. You love him. Founded on March 14th, 2002. About 22.6 thousand employees. Telecommunications sector is what they would call it. I don't know. Let's do this. Will SpaceX ever be profitable? Answer in one paragraph. Paragrafo. Now look at this. Now look at this. What is this? Oh my god. I should have just left it up there and read both of them. AI's got a way to go. Stupid shit. Either way, whether SpaceX will become consistently profitable remains a complex question that hinges on balancing its established revenue-generating divisions against its massive, capital-intensive ambitions. While the company has achieved dominance in launch services and developed a highly successful, profitable Starlink broadband segment, it is currently operating at a significant net loss due to the immense cost associated with developing next-gen reusable rockets like Starship and building expansive space-based AI data centers. Investors remain optimistic, as evidenced by the company's recent public offering, betting that these heavy investments in infrastructure and artificial intelligence will eventually scale into massive, high-margin revenue streams. Ultimately, SpaceX's path to profitability depends on its ability to transition from its current burn rate phase of aggressive expansion and R&D into a mature phase where the operational efficiencies of its satellite constellation and launch cadence can outpace its substantial capex. Okay. Alright. That's enough of SpaceX. We get it. Alright. What do you guys think about SpaceX? You think it's interesting? You think they're going to have a city on the moon and travel back and forth, launching satellites and making a bunch of money? I don't know. Pretty interesting stuff. Answer me this. How much would it take for you to fly to the moon, work on the moon for a year, and then come back? What would you need to see? How much money would it take? Answer in the comments, guys. That being said, we're moving on. That's enough of SpaceX. We're moving on. I clicked out of the one I wanted to get on. Crazy. We're moving on. Here we go. Alright, we're going to do coin market cap. We're going to check out the coins, the cryptos. Alright. We'll do the top 5 at least here. Here we go. Audiera is at $6.60 in the last hour. It's down 7.99%. In the last 24 hours, it is down 25.17%. Official Trump is at $2.13. It's up 1.05% in the last hour. Last 24 hours, it is up 22.65%. Dogecoin Old Dogecoin's at $0.0859. So 8.5 cents whereabouts. In the last hour, it's down 0.27%. In the last 24 hours, it's dead even. Make it make sense, guys. Solana is at $66.79. It's number 4 here. In the last hour, it is up 0.4%. In the last 24 hours, it's up 0.06%. Okay? Nothing too crazy happening in crypto here. Tether Gold is at $4,200.94. In the last hour, it is up 0.06%. In the last 24 hours, it's up 0.06%. Look at that. Then we got one of these wacky SpaceX thingies. Couple of them. I mean, look at this crap. It's not even a cent. It doesn't even make any sense, guys. I don't get it. Alright. Crazy. Crazy. So, very interesting stuff, guys. Like and subscribe. It's your cousin Dustin. Yeah, I think that's going to be enough for today. You know, pretty cool stuff. Pretty fun stuff. Pretty neat stuff. All right. Thanks.